So I'm going to have a look at oil, because obviously we've got this Saudi news. And we've had this bombing by drones of the largest Saudi production facility, which is like 50% of their output. So in Saudi Arabia, even crude oil, before it gets put on a tanker to go and be delivered to somebody, still has to go through this processing facility. So you can't say, oh, well, it's just a block on crude, but there's lots of gasoline or so on. It's 50% of their production. And the problem is that the Saudi ministry have not made any official comment. So some sources are saying that they're going to be out for some time and this is really bad and 50% of their supply is gone. And another guy has said that they're going to be back to running as normal on Tuesday. So which one do you believe? Because if they're back to running as normal on Tuesday, then there's no issue to supply. So the first thing to note is that the biggest effect of this is not going to be on the WTI that we trade or so much Brent, because Saudi oil is very sour, and the processing plants that handle West Texas crude oil and Brent crude oil are geared up more for lighter crude oil. So the effect in that respect, but in terms of supply, it is going to be an issue if they are going to be down for a few months like they're saying. And I think it will affect Brent more because of positioning, and Brent is much closer in Europe to where we've got these outages. So let's look at the Brent chart first, because in all of these oil charts, we've been really in a downtrend, building a bear flag. I think that's the pattern that we've been in. So here's Brent here. So from the big drop that we had in October of 2018, we rallied back to the 61.8. So we're really in a big consolidation zone. And then from the 61.8, we went all the way down and tested the 236 fit. So let's show that. So from this 618 back to the 236 fit. And now we're kind of in the middle of that golden ratio zone, deciding which way we're going to go next. So from this high to this low, we reversed at the 61.8 and came back. So that's kind of very, here we've got a double bottom. But since we've done that double bottom, we've been doing the same thing. ABC corrective patterns. This does look like a 5 wave. Okay, but then we made a new low here. So, this negates it. You can't make a new low. And so now we're still in our correction in a downtrend and sideways with completely flat, bunched up moving averages. So I'm going to say that if the pop in Brent oil can't get above the 200 moving average, or can't get above the 200 moving average, which is about 56, then we're still in a downtrend. If, however, the gap is more likely to be up here, I think, and these previous highs, which is where we keep getting stuck. Okay, and that also, let's put a level on it. It's a 786 fib. Again, look, we keep just doing these consolidating patterns. So here in this chart, we've gone from the 786 to the 38.2. From here, you would normally expect a rally back to the middle, and then you decide what happen next. But this is just a big, fat consolidation. I think only if we get above 58.70 and these two previous highs, this previous double top in Brent, are we going to be in an uptrend again. And if we are, then harmonic patterns give us a bunch of levels. First of all, 618, 236, we're going to go back to the 61.8 again, aren't we? And that's at 63.71. And if I measure from these legs like this, it's not quite, but this then becomes our zone, previous high. So 60, I'm going to say 64 to 65 would be our first kind of breakout level. But I'm not feeling it. I'm really feeling just like maybe top of the range. If we do then exceed this previous high, where are we going to go? Well, we've got a double bottom here. So when you have a double bottom, so let's take that away like this. You measure from the high. So the first thing we're going to look for on the open is where is the price trading. So it's double bottom then takes us up here to this 786 next, which gives us a Gartley pattern potentially. That's at 69.50, and maybe we go to 75, which would be a big ABC correction. So that's Brent. And we need to break out of this big mess. So we're not in any kind of uptrend unless we break above 59. 59 is really kind of it. So I would say that if we gap higher and it's anywhere 59 or less, then go to bed. And tomorrow, because very often, you know, when you see big gaps on a Monday like this, that's the high for the week or the low for the week. And so I would say if it's under here, we have got a selling opportunity, and we should look for the US Open tomorrow to sell this. Let's look at it on crude oil in front month. So the most affected is going to be the front month if it's a short-term fix. Here's our WTI October futures. We've got the same bear flag pattern. We're trading underneath the daily 200 moving average. The issue with this one is if we look at the weekly, you can see we're kind of holding above the weekly 200 moving average, but it's dead flat. That means trendless. That means sideways trend. So if this is the bottom of our range, this is going to be the top of our range up here. So we're looking at 61 for oil. So I'm going to say if we open around 61, we might open up here at, see, look at these fib levels from this high to this low. Again, this is the 61.8 down to the 236 fib. So if the front month, let's put the 38,000. Okay, so we're in this consolidation zone. So I'd say if we close above 61, or if we open gap up above 61, watch where the price comes back to. Because if it comes back to 61 and finds support, you can buy it. But if it closes back underneath, you know, we've got a sell set up and a false breakout. And this is just sideways. So 61 is the key level in crude. Let's take a quick look at the chart of the continuous front month futures. And you can say that this one, in fact, you know, although we've got a sideways range, and 61 in this one is the top of the sideways range. We've got a little bit of mini resistance. We might only gap up as far as sort of 58.80. So unless we are open above 58.80 and hold above it and then trade above 61, we are still in the top of our sideways range, and you can sell against those levels. I don't see it kind of going higher unless we break and hold above them. Okay, so there. We need to see what the Saudi ministry say officially. You know, the problem with these countries is you don't know what's going on. Do they not want the rebels to know how much damage they did, so they're not telling the truth about how much damage they did? Or, you know, do they want to stir up a fight with Iran, so they're pretending it's worse than it is? I don't know. But if the minister says they're going to be back online and pumping normally on Tuesday, and that's what happens on Tuesday, then this bullish move isn't going to last very long. Okay, never believe anything till it's officially denied. And just let's see where our price is going to open, outside of our sideways range or at the top of it where we can maybe sell it. Okay, bye everyone.